Something else that you need to be able to understand and then perform yourself is horizontal analysis and ratio analysis. So later on in the year, you'll learn some other types of analysis as well. There's also trend analysis, but for now, these are the two that you need to understand. So horizontal analysis involves analyzing the connections between a financial statement's individual results or collections of results for consecutive accounting periods. So if you think of this idea of horizontal, and you're looking across the years. So that idea we spoke about earlier, how a year's results are consolidated into one column. You're thinking about that in this case, and it's horizontal because we're comparing the different columns across the different years. So horizontal analysis is focusing on one line item of the financial statements. So you're choosing one account, one thing to focus on, with the goal of calculating the percentage or the numerical increase or decrease that occurred. So maybe if you look at the cash sales, then you could be thinking about how that has increased in terms of that monetary value, and then how much it increased or decreased in terms of a percentage as well. In terms of ratio analysis, this perhaps is more familiar to you because we've looked at some of those ratios already for profitability and liquidity. It's likely that you've already been introduced to some of the ratios already. And ratio analysis is just involving analyzing the connections between items or sets of items in the business's financial statements, and it's taking that form of ratios. So these ratios can be weighed against one another as time goes on to reveal different trends, and it can be used to compare one business or industry to another, and it can also be used to analyze a business against industry benchmarks. So there's commonly those three categories for ratios. We've looked at two of them, profitability and liquidity, and then the final one I mentioned earlier is financial stability.